Today we're going to cover price action. Price action is the study of price movement of a trading instrument. Price is a real-time indicator of supply and demand in a given time frame of measurement, and in this case we're going to measure it on bars and candlesticks. Price action measured for a single bar or candlestick or a series of bars or candlesticks can be also effective for looking at changes in supply and demand. As always, the most effective is to trade in the direction of the trend. Just want to go over the basics of bars, candlesticks, characteristics. We have the spread or range of the bar or candlestick. That is extreme high, and the extreme low of that particular bar or candlestick is the spread or the range. The next item we have is the open. The open is where the price came from. Okay, so that's where the price opened on this particular bar, and the close is where the bar closed on in whatever time frame that you're measuring. For instance, if you're measuring a 1 hour bar, the beginning of the bar will open right at the open area, and the close of the bar after 60 minutes will be at the close of the bar. Wide range bars indicate that more price action levels were being traded than the narrow range bars. The other thing is that if the close is higher than the open, it indicates that there's more buying than selling. So this this bar that's actually green, where the close is above the open, indicates on that time frame that there is more buying than selling on that particular bar. Conversely, if a close is lower than the open, it indicates that there's more selling than buying. So if it opened higher and closed lower, what that indicates is you see more selling on this bar than buying. Sometimes the bar closes in the middle. That's where the buying and selling are equal in that time frame if it ends up right in the middle. We're just going to go over some bar and candlestick characteristics, and the first one we want to cover is inside bars. Inside bars only consist of 12% of all total bars. So that means that if you have 100 bars on the chart, on average, only 12 of them on the whole chart will be inside bars, or inside meaning it does not break the extreme high of the previous bar or the extreme low. It basically is trading within the spread or the range of the previous bar. For those of you who want to see the study by Brett Steinberger on this is the web link. If you happen to not be able to pull up that web link, you can simply email me at ken@neoharmonics.com. More than happy to send you that link. Let's take a look at another type of bar that only happens 11% of the time. Those are known as outside bars. What the outside bar is that on the previous bar you have the extreme high and you have the extreme low. Outside bars break both the extreme high and also the extreme low. What that is signifying, as is making not only a higher high but a lower low, buyers and sellers are actively seeking fair value that may be outside of the previous range. So let's take a look at how these bar candlestick characteristics are going to help our trading. To review, 12% are inside bars and 11% are outside bars. So outside bars break a high and a low, where an inside bar doesn't break either. Now the other percentage of it, which is the 88%, right here you have 23%, okay, which leaves you 77% that it only trades out of one end or the other. It means that 77% of the time it actually trades either out the top of the bar or the bottom of the bar. If you take that 77%, you add it to the 11%, which breaks both ends of the bar, you have 88% of the bars that either trade higher or lower or both. So one of the things that we're going to look at is how this is actually going to help us increase our trading probability. So let's take a look at what the inside bar is telling us. On the previous bar here, we just have a normal bar. This red bar, labeled in this particular case, happens to be the inside bar, inside of the range or the spread of the past bar. And what we're going to look at is the meaning behind different price action and what it may represent. In this particular example, if it happens to break below the low of the inside bar, what that signifies is the sellers are trying to establish control of this instrument. By breaking the low, the sellers are establishing control. So this we're going to label a seller's effort. Now, in the case that the sellers cannot maintain control and establish a selling or downtrend, the other scenario that can happen is that it can actually come all the way back up to where the low of the bar is, get above that, and actually get above the extreme high of that inside bar, which shows that the buyers are trying to take control of the price action. Now, if the buyers were actually able to push that up and have the close above the extreme high, the one thing I want you to know is that for that to happen, buyers have to come all the effort that the sellers actually did in taking the bar down. And then they had to overcome that this area of fair value was no longer valid and actually had to establish themselves above that area of fair value. So this is quite a bit. So if you ever see an inside bar and it trades below that, you want to definitely trade in the direction of trend. So in this case, if the trend was long and this happened where the sellers came down and took out the bottom of that inside bar, if it happens to be where they go back up and take back the top of that bar, that may be a clue that there may be increased probability to take it in the direction north. The next type of bar I'd like to go over is outside bars. Outside bars, once again, break the extreme high and also the extreme low. If the previous bar or spread was the fair value of the time frame before, this particular bar is challenging both the low and the high, trying to reestablish new values. This is a one bar analysis, and what you want to watch for is you want to watch for where the bar actually closed, okay? Because they mean different things if they close in different areas. So if you have the previous bar spread and happens to close above the high of the last bar after challenging both ends of the range, what you have is that bar is going to favor buyers. The next one is that if it happens to close below the extreme low, it's going to favor sellers. The third scenario is that if it actually happens to finish inside of the previous range, which was the previous range of fair value for that particular time frame, then what we'll probably have to do is wait for more information. Even if it gets close to one of those ends, it's still in the previous area of value. So we'd want to wait for more information on subsequent bars to try to make a decision on. Thank you for joining us for this session of inside and outside bars from Neo Harmonics.